ETF fans. Mike here with today's video insight. Today I'm going to be using our ETF Navigator located on the side panel under databases. So what I'm going to do is I'm going to navigate into our databases to our Navigator, which is your open architecture to group ETFs up using our proprietary classification system and to aggregate up flows, AUM, averages on returns, as well as expense ratios for any different combination of strategies you want across our database. It comes pre-populated and grouped by asset class, composite, and category, which are our three highest level classification systems. But today I really want to zero in on factor ETFs and specifically US large cap factor strategies and look at our different ways that we classify these ETFs. Before I jump in and start setting the filters to do this, a couple of things to note. When you're looking at factors, there's two ways to identify those in our databases. Our classification system has a field called strategy and selection. Strategy is going to be broad-based. Is it a beta strategy? Is it a factor strategy? A rotation, like tactical strategy? Is it a specialty type fund? Or is it a target risk type fund? So those are our five broad-based strategies. But then our selection grouping classification is going to get into much more detail, like value, quality, momentum, growth, things of that nature. And that's really what I want to focus in on today to see if we can see any trends on what types of factors are doing well over the last 6 months, year, so forth. The other way to look at factors on our database is to use our derived analytics, which is available in our ETF database, where instead of looking at the prospectus and what the manager is telling us to create a subjective classification system, it's a pure look-through analytics of the fund to tell you, does it have a clean balance sheet, therefore a higher quality rating? Does it have, are the companies inside of the portfolio beating that of the broad-based benchmark, therefore it has higher momentum? So two very different ways. They do directionally align, but it's important to note the difference between our classification system, which is a subjective review of the portfolio based on the prospectus, based on the manager collateral, and our derived analytics classifications, which is a purely objective, rules-based analysis of the companies inside of these ETFs or mutual funds. So with that as a starting point, today I'm going to use our classification system, use our Navigator tool to look at large cap, US large cap funds, and grouped up by different factors. So to get started, the first thing I want to do is I want to isolate just those types of strategies that meet today's exercise. So I'm going to go to my filters tab. First thing I'm going to do is I'm going to go to classification. I'm going to set a filter on asset class, hit apply. I'm going to set a filter on composite to be equity, size, and style US, meaning broad-based size and style strategies. I'm then going to go into my category, and I'm just going to select large cap funds. If I open this up a little bit, there should be 9 size and style strategies, which I can see the 3 for large cap, mid cap, small cap. And I'm just going to focus in on large cap to keep it apples to apples here on our factor groupings. Now that I've done that, I'm going to do one more thing, and that's I'm going to go down to my strategy, which I was just talking about, and I'm just going to remove tactical. It's going to be all your sector rotation stuff just to keep it a little cleaner. And I'm all so that will get me to the set of ETFs that I want to look at. So I can see there's 561 funds that meet that criteria. The second step of this is to redo my groupings. So to redo my groupings, first thing I want to do is I want to keep that composite level in there, but I don't need asset class. I already know that I'm looking at equities, so I'm going to get rid of asset composite. I also don't need category because I don't need to know, what is the category it's grouped in. I want to actually look at the more detailed factor grouping. So I'm going to go ahead and remove category. And what I'm going to do is I'm going to go now and set the groupings that I do want, which is I'm going to go into columns, and I'm going to regroup using that selection, which will be all of my different specific factor and composite strategies. So I pulled that down. Now that I have that there, let's take a look what we've got. Okay, we can see these are all of the different selection meaning how is the index or the portfolio manager selecting the companies from its starting universe that meet its cut to be held in the portfolio, right? So just to quickly go through this, composite is going to be your beta strategies. It's going to be strategies that do not utilize any sort of selection criteria to limit the number of to limit the types of companies they hold, right? So it's like S&P 500. It's going to own every company in the S&P 500. Now it doesn't differentiate between weighting methodology. So there could be S&P 500 equal weight strategies in here, as well as S&P 500 market cap. And we could add a second grouping for that, and that's our implementation, which shows you what the weighting methodology is. But for today, I want to talk about the selection effect of the strategies. So composite, there is no overlay on selection. Growth obviously is trying to identify those companies that meet certain growth metrics. Dividend, it's using some sort of dividend screen to determine what companies get included in its portfolio. Value, it looks at lower PE multiples, price sales multiples. Multi-factor is going to be your largest, going to be a catch-all. A lot of active strategies are multi-factor, right? They're looking at a number of different factors to determine what comes in there. You know, some could be tilted one way or the other, but the fact of the matter is there's not one specific factor above all else that they're looking at when they're selecting the securities for inclusion in their strategy. Quality, companies with cleaner balance sheets, high ROE, earnings consistency, low debt to equity ratios, low volatility, companies that exhibit less risk, usually a standard deviation metric of some sort, volatility metric relative to the broad markets. Momentum, we know what that is. And we can see I did actually include those rotation sectors, toggle, specialties. So I'm going to remove those real quick. And it looks like I forgot to hit apply on that filter. So I'm going to go to selection, and I'm just going, strategy, tactical. I'm just going to hit apply there to remove those out. And we do have a catch-all, special, right? What is a special category? It might be it's using a select guru list or something of that nature, but funds that are using some sort of factor or some sort of selection methodology, but it doesn't fit into one of your standard grouping methodologies. All right, so I've got the setup here. Last thing I want to do is I want to focus in on returns and flows. So I just want to add a couple more return data points in here. So I'm going to go into my columns, total return. I'm going to remove 1 day. I'm just going to stick with 1 month, 3 month, year to date, and 1 year. Similar with flows. I'm going to go in and just keep it clean, remove 1 day, 1 week, keep 1 month, 3 month, year to date, and flows, 1 year. So we're kind of looking at similar time frames. Now that I've got that set up, I can do a little analysis here and make my columns a little wider. And let's just look at a 1 year basis. Not surprisingly, so for this whole group, the average return is 21.87%. Growth funds, those 51 growth funds are up 35.24%. Momentum, right now it owns a lot of growth companies. The reason there's a difference there is because when the environment does change, momentum can quickly become value type strategy, et cetera. So it is different than a growth screen. I think that's the second best performing on the 1 year. Our composites, which is mostly made up as market cap weighted strategies, those 88 funds are up 24.55% on average. Multi-factor, that specialty factor is up there with those 34 funds. And then of course your more value centric dividend, value, and low volatility are by far your worst performing. So pretty big divergence of return when we group up using that classification system. Similarly, if we look at 1 year flows, composite's always going to be at the top. These are getting your big allocations into your broad-based beta strategies, the S&P 500, the Russell 1000, et cetera. Growth is number 2 with 44 billion. Multi-factor, which includes a lot of those new active funds, 41 billion. Value at 16 billion. But really the whole exercise today was to illustrate how using the Navigator tool allows you to quickly build your own custom groupings, set your own custom filters to zero in on parts of the market to see what types of strategies are doing better or worse. And then of course, just remember, once you've set those groupings, the last grouping always creates a link into the database. If I wanted to look at those 15 quality funds, which I can see here if I open it up as Qual, SPHQ, Dimensional US High Profitability, so on and so forth, and I wanted to evaluate them side by side using our look-through analytics, because I've set that selection as my last grouping, I can click this quality link and it's going to pass through those filters necessary to isolate those 15 funds in my database. And just for fun here, let's quickly go into our equity derived analytics and take a look. Since these are all stated quality funds, how are they doing from a look through basis on our quality factor rating? So I'm going to slide over here to the right. I'm going to go to my quality rating, and I'm going to see, okay, yeah, the vast majority of these are pretty high. That being said, this SRHQ, which I just know the fund is more mid-cap fund, so it's a little bit lower. So there's only 4 of the 15 funds getting above average quality tilt on our scoring system, but a lot of them are very close to above average when I look at it. So on grouping these up, their quality rating would be much higher than the broader universe together. But based on our quality rating metrics, only 4 of them actually meet that above average, or 1 standard deviation above the average for relative to the world indexes. I won't get too much detail there, but just wanted to really isolate how to use that Navigator tool to quickly evaluate different areas of the ETF market or mutual fund market, and then dive in and do some deep analytics using our database, utilizing those auto links that you create as you build out your custom settings. So a little longer video insight today, sorry, but I feel like the Navigator tool, as you learn to use it, is one of the most powerful tools on our platform for expediting and really zeroing in on your research across the ETF landscape. And so I want to spend a little time showing different ways that I use it, give you some ideas on how to try it on your own. If you have any questions about today's video, reach out to team at ETF Action. We'd love to set up a one-on-one demo, answer any of your specific questions. Have a great day, and thank you for watching today's video insight.